Hey traders, welcome to your Forex Focus. Sorry this is coming out to you a little bit later than usual, but we were away at the weekend, so I didn't have an opportunity to sit down, go through the charts, and obviously record this video for you. But what we're going to do, as always, we're going to go through the charts now and take a look at the opportunities that are setting up for the week ahead, look at the general direction of the market so that you understand how best to kind of position your portfolio and your trades for the week ahead so that you can maximize your profits and hopefully minimize your downside, okay? Now, remember that these videos here, they're not trading advice in any way. So I'm not saying go ahead and go and take this trade. I'm just giving you an idea of what to look out for and how I'm going to play my own portfolio. So with that being said, let's jump across to the charts and let's take a look at what's setting up for the week ahead. We'll start off by looking at the Aussie dollar. Now, what I wanted to do this week is a lot of the time I talk about the sort of like your directional bias. I talk about fundamentals, and I know that a number of you watching these videos, some that will kind of go over your head a little bit, and some of you won't be interested in it at all. So I thought that perhaps if we take it back a little bit to the technicals and we look at the longer term picture from a technical perspective, that's going to help you really understand what's going on and how you want to, as I said, sort of position your trades and position your portfolio. So looking at the Aussie dollar, we've been saying that we are sellers of this for a little while now. We know that with what's going on in the US at the moment, the US dollar itself has been very weak, and it looks like that's probably going to continue for the foreseeable future. Having said that, it isn't sort of like a fundamentally driven move, so it's more a sentiment driven move. So from that perspective, I don't think that we're going to get, a massive bout of dollar selling throughout the rest of the year. I think that we are going to have a bumpy road ahead, but there are still going to be opportunities, and eventually the fundamentals will kind of like, they'll take hold again. But as I said, I don't want to go into those right now. So looking at the technical picture, it also shows you something very similar. So if we zoom out to the weekly chart here, we can see that we've had a very big down move. The market has then pulled back, and it's playing with that area of previous support, which becomes resistance, which we said that we wanted to sell from. So we've sold from here a couple of times in the past using our 280 as a stop, which has worked out well. And I think that that kind of has to be the tactic going forward. Even if the market breaks above here, looking at this weekly chart over here, would you say it's reasonable to say that the market just moves from here all the way up to the highs, or do you think that there will be some pullbacks in between? I personally think that there will be some pullbacks, some corrections. Even if we do get a big, bout of dollar selling that takes us all the way up here, I don't think it will be plain sailing. I think that we will get those, the sell-offs of the rally, so that the profit taking essentially. So what we then need to do is look at, well, where is it that we would potentially want to get short in this market if our overall bias is to the downside? The first point is where we are right now, and then after that, you would want to maybe look at this previous area over here. So this previous support area could then become resistance. So what we would go and do is we put in another level in there like that. And we can see that the market is not too far away from the market is at the moment, but it does give it plenty of room if the price does break through here for it to be able to turn around at a level that's not directly, upon the next level. Because the last thing that you want when you're trading technically is levels all over the place. You want them strategically positioned where you're most likely going to get some sort of a turnaround. And remember, the way that we trade, we're not looking for a big turnaround. We just want a very small reaction to a larger level, which allows us to be more consistent than most retail traders. So what we would be looking for there is, if we were to take this from the daily chart, we can see that the ATR here is 60 or 58, 60 pips. And so we'd be looking for a 120 pip stop and 120 pip target, which means if the market got all the way up here and it went there, with sort of like a clear path, so to speak, with little resistance, when it got there, what we would be looking for is a reaction that took us just down towards this level here. So we wouldn't want it to even, completely reverse that move. We wouldn't want it to retrace the entire move. We just want a very small reaction, and we would be able to take profits, which in the grand scheme of things, even if the market's moving in the opposite direction to our trade, as long as we take our positions from strategic locations and we're not looking for that big turnaround, then it still puts us in a position where we can take profits. Moving on to the next one, which is the euro dollar. So the euro dollar is a little bit different. The euro dollar has some good fundamentals going for it as well, which is why we said that from that perspective, we're not sellers of the euro anymore. We know that the dollar is weak, but, more to the point, we feel that the euro is going to be stronger in the coming months. So we've kind of got the best of both worlds there, and we want to buy into this euro strength. Now, last week, unfortunately, the markets went sideways, so we didn't have an opportunity to do that. But if the markets were to sell off and pull back to, let's say, around the 1.0687, then we would be looking to become buyers from that level. Looking at the weekly chart, you can see that it's been in a pretty tight range for the best part of 2 years now. So even though it maybe it's broken out to the downside, it's closed back within it. So we're expecting kind of a move up towards the resistance area at 1.1207 before we get any sort of like a big correction. So essentially what I'm saying there is that we're going to be buyers of the dips up until we get into that area. And then when we get there, we'll have to reassess what the market sentiment is to see whether it's likely we're going to get a breakthrough that level or we're going to get a rejection of that level. Looking at the pound dollar here, similar sort of situation. Fundamentals aren't quite as strong as a euro, but from a technical perspective, which, I keep talking about the fundamental picture. I haven't given you the details there, but I said at the beginning we would stick to the technical. So let me try and stay on track there. So looking at the technicals here, we've got a big level of support, which the market bounced from. We can see this over here. So it came down to that support level back in October of 2023. It came down there again in January. So it's really no surprise that we got a bounce from that level. Then the market broke through this big level of resistance, and just above here we have another level at 1.3137, and just above at 1.4421. So we are expecting a sell-off at some point in the near future. If the market gets up to that level, I will become a seller. That's if we don't get the pullback before. However, if the market does pull back, then I'll be looking for a buy somewhere around this level around here, around the 1.2803. So if we can get back to that level, that's where I'll be a buyer. And even below there, you can see on the weekly chart, and it's more prominent on the daily chart, but we've got another big support level at 1.2660, which also could provide an area of support for the pound dollar. As I said, in the coming weeks, I'm expecting this market to move up, but I'm going to be looking for corrections to be able to get in at better prices rather than buying the highs. And then if we get up to the resistance level all the way up here, then I'll look at becoming a seller. Again, for the short-term tactical trade, I'm not looking for any long-term trend trades. I'm just looking to get into and out of the market very quickly, just remaining consistent with my trade management, my risk to reward, and looking for a high win rate, even though the risk to reward is just a 1-to-1 there on these particular trades. The New Zealand dollar, as we can see here, it has sold off. It's pulled back to a previous level of support at 0.5771. So our previous level of support there is now acting as resistance. Just above there at the 0.5846. Even we've got another resistance level. I was actually looking at this on the 4-hour when picking out these levels. I just zoomed out here to the weekly to give you the big picture. But they look like very, very good levels for the market to potentially trade from. I think looking at the overall price action here, given that we sold from here a few weeks ago, made some nice profits, I'm not sure I would look to sell from here again right now. Judging by how close this particular level is to the previous one down here, I think maybe just waiting and looking at this price action, waiting for the market to get up to that level and then becoming a seller from the level just above, rather than being more aggressive and trying to sell from this area here. Looking at the dollar CAD, so the dollar CAD is a mess at the moment. We all know why that is. We don't have to go into it. The question is, well, how do we trade it? I think in the short term, it's a difficult one. If we're looking at the big significant levels, the big key levels, then I would probably look at 1.3987 as being the first area where I would be comfortable becoming a buyer. Ultimately, the trend is to the upside in this chart. So, you do have to be a buyer. If you have to choose a direction, and I like trading with a directional bias, it would certainly be to the upside. We can see we've got an upward sloping trend line here, which is respected quite nicely. If the market pulls back here to this previous level of resistance, which could act as support, just below there we've got the trend line. If we use a 280R stop and we use sort of like a guardian approach, a two-trade approach, that's 90 through, let's call it 100. So 200 pip stop there. will get you in here. And remember, we don't want to put the 200 pip stop right from this level. We put it just below here. So that would be our ultimate stop from somewhere. Let's pick a level around this trend line. So somewhere around here, but we would initiate a position from here and then add a second one in there. Hopefully the second one doesn't get triggered. And what happens is that we're able to come out of that market again. Like I said, we don't need the market to give us a big reaction. We don't need a big trend change. We just need that little bit of a movement over there, and that will allow us to be able to take our profits, which is ultimately what this is all about. The dollar franc has been pulling back for a little while. This has been one of my favored trades of this year. I had the stuff with Donald Trump. Not interfered with the markets. I think just purely based on fundamentals, this market is moving up. It just depends when, sentiment is going to kind of like release its hold on the market and we can get back to some of the, the more traditional fundamentals, in which case I think that this market is moving up. And I think that this is a good area if you're looking at it for the long term. So from a portfolio perspective, this is a good area to be a buyer from. So the 0.8816 is a good area to start initiating your buys. If it drops below there, then you probably take a look here on the weekly at the 0.8566 as being another potential area to add another buy trade in there. But ultimately, the positioning of this portfolio is going to be to the upside. The question are we going to get an readjustment of this sort of range bound market, this range over here? Are we going to get an adjustment to the upside, or is it just going to settle back into this market? In both cases, we'd be able to make money. It just depends where is it that we buy from in order to do that. And at the moment, as I said, this is a first area, this is a second area, and then we will reassess from there. And then finally, we have the dollar yen. So the dollar yen, as you can see here on the weekly, is trending to the upside. No surprise there, being the yen is a big funding currency and interest rates in the US have been high. At the moment, sentiment and some sort of like readjustment in the Bank of Japan's monetary policy has forced this to the downside. So we are seeing we're getting a little bit of yen strength in here, combined with the negative sentiment towards the US, which is what's really pushed this down. But is this sustainable? I don't think that it's going to continue down through this particular trend line. So I would say you could become a buyer here, very similar to, was it the dollar franc that we were looking at? No, it wasn't that one. Hold on. So we talked about the dollar CAD, where we've got one level and then the upward sloping trend line just below there. So the dollar yen would be looking at exactly the same sorts of thing. The market is at this level here. You can become a buyer here. Second position, where do you put it? Down there at around the 144.23 level, in and around that level there, because I think that even if the market does start to sell off from here, again, the market dynamics dictate that it's not just going to move like that. What tends to happen is you get this sort of a pattern there, and that in there is all we need in order to be able to take profits. And that's the beauty of trading this particular way. Okay, so thank you so much for watching. I hope you enjoyed the video. If you have any questions, please let me know. Sorry that it came out a little bit later than usual, but I look forward to speaking to you in the next one. Take care now and have a good week's trading.